Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as type of order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
At marami rin ang nangangailangan ng alaga mo. Pero may tanong kami, inaalagaan mo ba sarili mo? Baka nakalimutan mo na deserve mo rin ang alaga na binibigay mo. Kaya kami na ang mag-aalaga sa'yo. At sa mga araw na hindi mo kaya unahin ang sarili mo, kami na ang bahala. Isang tawag nyo lang, may sagot na kami sa lahat ng hinahanap mo. Mapagkakatiwalaan nyo na maaalagaan namin kayo at ang mga minamahal nyo. Dahil mahalaga sa amin ang iyong oras, agad-agad kami darating. At paulit-ulit namin ipapadama sa inyo ang aming alaga. Kahit masyado kang busy at di mo kami mabibisita, huwag na kayo mag-alala. Dahil ang alagang deserve mo, ang alagang hatid namin sa'yo. Your Care Expert, South Star Drug.
Good afternoon, ladies and gentlemen, and welcome to another edition of AB Capital Securities Earnings Call. I'm Ian Garcia for AB Capital Securities, and I will be your host and moderator for our call this afternoon. Now, we would love to know where you're watching us from, so if you can, please comment in the comment box where you are now. Okay, so today we will be joined by our friends from Robinson's Retail Holdings, or RRHI. This is not the first time that we will be doing an earnings call with this company. In fact, RRHI was our first ever earnings call around 5 months ago when they shared with us their full year 2021 earnings. We have done 12 earnings calls since that first one. And if I may say so myself, we have come a long way since then. As you can see, my lighting is much better now. Speaking of things that have come a long way, RRHI has certainly made big strides to recover from the hit that the retail sector took from the COVID-19 lockdowns. You have seen the headlines, and it's no secret that RRHI reported spectacular earnings for the first half of this year. And this is why we have invited them back to give you, our valued clients, exclusive access to the company's top management. Now, if you could please insert the video from the RRHI office. Thank you. As you can see from the video of our speakers today, it is no surprise why RRHI is one of only 4 Philippine companies to be included in the Bloomberg Gender Equality Index this year. Today, it is my honor and pleasure to introduce to you Gina Roa Depaling, Vice President for Corporate Planning and Investor Relations Officer, Christine Tueres, Group GM of Drugstore Segment, Stanley Ko, Managing Director of Supermarket Segment, and Suresh Ramalingam, General Manager of Ministop Philippines. Hello, Ms. Gina, Christine, Stanley, and Suresh. Thank you again for indulging us for another earnings call with our clients. Without further ado, I'd like to turn over the floor to RRHI for their presentation.
Thank you, Ian. Good afternoon, everybody. Thank you for joining us to review Robinsons Retail's unaudited results covering the second quarter and first half of 2022. This presentation will cover the company's financial performance in the second quarter and first half of this year, an update on our store network and e-commerce business, and some recent company developments. The Q&A session will follow after the formal presentation to be answered by the management team. Moving on to our consolidated results for the second quarter of 2022, consolidated net sales grew by 19.8% to 42.9 billion pesos. Blended same-store sales growth of 15.5%. E-commerce sales was 3.1% of total RRHI sales. 110 basis points gross margin improvement to 23.8%. 90 bips EBITDA margin expansion to 8.9%. Net income attributable to equity holders of the parent company more than doubled to 1.6 billion pesos. Store portfolio of 2,235 stores and 2,082 TGP franchise branches nationwide. Robinson's retail store count stood at 2,235 as of June 30, comprising of 300 supermarkets, 938 drugstores, 223 DIY stores, 50 department stores, 443 convenience stores, and 281 specialty stores. We opened 68 new stores in first half 2022 but closed 41 stores. We also have 2,082 franchise stores of TGP. Serving as fulfillment centers for our store network, our e-commerce operations is complementary to our store network. GoCart, our very own e-commerce site, currently has 14 banners in the platform, and we will be adding 2 more before the year ends. We have also added 61 stores for first half 2022 in GoCart to end June with a total of 168 stores. RRHI continued its strong performance, posting net sales growth of 19.8% in second quarter and 15.3% in the first half to 43 billion and 82.4 billion pesos respectively, both surpassing pre-pandemic levels in 2019 by 7.7% and 6.7% respectively. Most formats contributed double-digit growth rates in the first half of 2022. Improved sales were driven by the 10.2% same-store sales growth in first half this year, given improvements in mobility and easing of border restrictions, aided by sales uplift from election spending and partially from series of price increases by vendors. With a rebound in non-discretionary formats with the opening of the economy, sales contribution increased to 22.9% in first half of this year from 20.4% last year. Our e-commerce sales grew by 1.5 times and accounted for 3.6% of total sales in the first half of this year from 2.8% last year. In second quarter, however, e-com sales contribution already slowed down at 3.1% of total sales versus second quarter last year of 3.6%, mainly because of the easing of restrictions. Blended same-store sales growth for the quarter was at 15.5%, a turnaround from previous quarter's minus 3.4%. Department store, DIY, convenience store, and specialty store segments delivered double-digit SSSG. Year-to-date SSSG ended at 10.2%. Gross margin expanded by 110 bps in 2Q to 23.8%, mainly attributable to better product mix. This led to year-to-date gross margin improvement by 60 bps to 23.5%. EBITDA margins advanced by 90 bps to 8.9% in second quarter and 70 bps to 8.7% in the first half. OPEX as a percentage of sales declined for majority of the business units, resulting from strong SSSG and full year first half 2022 impact of the cost-cutting measures implemented during the height of the pandemic. Net income attributable to parent registered at 1.6 billion for the quarter, more than double last year and higher than pre-pandemic level by 44.7%. This led to year-to-date net income after tax reaching 2.7 billion, an increase of 64% versus last year, and higher than pre-pandemic level by 59.8%. The surge in profitability is attributed to extraordinarily good operating performance, forex gains and higher equitized earnings from Robinsons Bank and dividend income, coupled with our share buyback. Earnings per share increased at a faster clip by 122.2% to 1 peso and 04 centavos per share in second quarter and 69.6% to 1 peso and 83 centavos per share in the first half. Let me turn you over to Stanley to discuss the supermarket segment.
Hi, good afternoon. The Can you hear? The supermarket segment recorded net sales of 24.3 billion in 2Q. This is 15.2% ahead versus the same period last year. Same-store sales growth was at 9.4%, a turnaround from minus 14.4% in 2Q 2021, driven by higher transaction count despite lower basket size. Consumers are shrinking their purchases or buying cheaper items in response to the high inflation that reached 6.1% in June. The reinvented Shopwise Antipolo store, which was relaunched on May 26, has also started to make positive contribution with an average daily sales improvement by 38% versus pre-launch ADS. Supermarket year-to-date net sales ended at 46.7 billion, up by 10.8%. E-commerce as a percent of sales grew to 3.5% in the first half of 2022 from 2.9% in the previous year. With the opening up of the economy, e-commerce sales contribution to in 2Q has softened to 2.8% versus 3.9% in the same period last year and 4.2% in 1Q 2022. Gross margin improvements were attributable to higher transaction count, coupled with higher prices, increase in indent penetration across all banners, improvement in assortment mix. EBITDA margins were at par versus last year as gross margin improvements were offset by additional expenses from the new stores, still underutilized new distribution center in Pampanga, and lower rent concessions. At the end of June, there are 145 Robinsons Supermarket, 91 Robinsons Easy Mart, 16 Shopwise, and 35 The Marketplace, and 13 No Brand for a total of 300 stores. We'll turn you over to Tim for the drugstore segment.
Next, Stan. So the drugstore segment generated net sales of 6.9 billion, up by 9.4% in second quarter and 14 billion in first half, an increase of 14.2% on the back of healthy same-store sales growth and sales contribution from new stores. E-commerce sales also doubled and accounted for 5.9% of our sales in first half of 2022. Blended same-store sales growth of South Star Drug and Rose Pharmacy remained robust at 3.7% in second quarter and 9% in first half, with improved sales from mall and supermarket-based stores, buoyed by the effects of election spending. Prescription drugs remained as a top driver of growth. Gross margin expanded by 40 bps in second quarter and first half to 20.3% and 20.1% respectively. Rose Pharmacy reflected significant margin improvement as a result of trading terms alignment and other supply chain synergies with South Star Drug. EBITDA margin grew by 90 bps to 8.9% in first half, with continued improvement in Rose Pharmacy. We ended the quarter with 592 South Star Drug and 346 Rose Pharmacy and 2,082 TGP stores. Now I turn you back to Gina for the DIY segment.
The DIY segment expanded net sales by 14.5% to 3.1 billion peso in second quarter and 7.2% to 6 billion pesos in the first half. E-commerce sales contributed 3.6% of total sales from 2.8% last year. Same-store sales grew 15.5% in second quarter, a turnaround from minus 0.1% in the first quarter, with transaction count increasing by 14.5% in second quarter versus last year. This resulted in year-to-date SSSG at 7.4%. Automotive, kitchen and bath, and hardware grew the most among the DIY categories. Gross margins were down by 140 basis points to 30% in second quarter and 170 basis points to 30.9% due to sales promotions to move out aging inventories. OPEX as a percent of sales fell significantly as a result of increased productivity driven by improvement in sales. This lifted EBITDA margins by 190 basis points to 12.9% in 2Q and 50 basis points to 13.6% in first half. Our DIY portfolio totaled 223 stores comprising of 181 handyman do-it-best, 31 True Value, and 11 Robinsons Builders. Department store net sales more than doubled to 3.5 billion pesos in 2Q, bringing first half net sales to 6.1 billion, a 68.9% increase from last year. Same-store sales advanced by 94.5% in 2Q and 55.9% in first half. Shoes, bags, and luggage and apparel continued to be the top categories due to people going back to their offices and with people now starting to travel for business and vacation given the easing of travel restrictions. E-commerce grew 34% versus last year and accounted for 0.9% of sales. Gross margins advanced by 100 bps to 30.3% in 2Q and 80 bps to 30.5% in first half, coming from the increased share of outright sales versus concessionaire sales. Strong top-line growth more than compensated for increased OPEX to improve EBITDA margin by 650 basis points to 8.4%. Robinsons Department Store ended the quarter with 50 stores. I will now turn you over to Suresh to discuss the CBS segment.
Thank you, Gina. CBS net sales accelerate by 27.3% to 1.6 billion and 16.5% to 2.8 in second quarter and first half respectively. E-commerce sales rose to 2.9% of sales from 2.6% last year. Same-store sales surged by 34.6% in second quarter and 19.3% in first half, given spike in a transaction count by 35.8% and 21% respectively. On top of the new product launch and consistent marketing promotions, the number of stores open for 24 hours also grew to 401 stores from 291 last year. In terms of cluster, BPO and commercial areas, where 55% of our stores are located, are leading the growth with SSG of 46% and 31% for second quarter and 52% and 30% for first half. Gross margin and royalty income expanded by 500 bips and 330 bips in 38.6% in second quarter and first half, respectively, as RT product continued to increase its share in the sales mix. EBITDA margin expanded by 74 bips to 10.7% in second quarter and 570 bips to 10.3% in first half, given a strong sales coupled with improvement in the gross margin and push in the RT CBS sales mix ratio and control in OPEX. Thank you. I'll hand over back to Gina. Thank you.
For the specialty store segment, net sales for the specialty segment grew by 26.5% in second quarter to 3.6 billion pesos, with year-to-date sales at 6.7 billion. Bulk of the sales came from the appliance and consumer electronics segment. E-commerce sales as a percent of total sales was 2.1% for first half. For second quarter, e-com sales as a percent of sales has eased to 1.8% from 3.1% last year and 2.6% in first quarter of this year. SSSG remained robust at 24.1% in second quarter, with all formats contributing double-digit growth. This resulted in a significant jump in year-to-date SSSG to 22.7%. Blended gross margin expanded by 150 bips to 25.5% in 2Q and 20 bips to 25.8% in first half. The strong SSSG, helped by gross margin gains, lifted EBITDA margins by 210 bips to 9.9% in 2Q and 130 bips to 9% in first half. The specialty segment ended with 281 stores for the period. On working capital, Robinsons Retail cash conversion cycle was at 23.2 days in first half and 14.2 days in the last year, same period last year, still reflecting faster payment to vendors to be given priority to load up purchases at lower prices before vendors effect price increases. On our balance sheet, cash and cash equivalents plus liquid marketable securities amounted to 22.6 billion pesos as of end June 2022. We are in a net cash position of 14.9 billion pesos with borrowings of 7.7 billion. Our return on assets and return on equity increased to 4.3% and 8% respectively, driven by higher profitability coupled with increased dividend payout and our continuing share buyback program. On our CapEx almost doubled to 1.7 billion for the first half of this year, with bulk or 72% of the CapEx spending going to the supermarket segment as we added new stores and renovated Shopwise. Supermarket opened 15 new stores in the first half of this year, a record for the segment. As reported by Stanley earlier, the reinvented Shopwise Antipolo store was relaunched on May 26. From then, we are already seeing a lift of 38% in average daily sales as compared to the pre-launch ADS. The reinvention aims to give Shopwise a more upscale, industrial look, attracting the insulated shoppers. We are targeting to complete the reinvention of Shopwise Makati by late third quarter of this year or in September. South Star Drug launched its first drive-through store on June 17, 2022 in the city of Muntinlupa, providing its customers a more convenient way to access its healthcare products. The additional service was welcomed by our customers, as evidenced by the 40% drive-through sales share to total store sales. RRHI, through New Day Ventures, invested in an instant commerce company called DART for $300,000 US dollars, equivalent to 15% stake of the company, based on a pre-money valuation of $4 million US dollars. Total raise was around 1.3 million. DART is a quick commerce business, which is basically e-commerce in a new and faster form. DART's model is based on Germany's Gorillas, Europe's largest Q-commerce player, which promises delivery of goods and services within 15 minutes of ordering by using dark stores. It currently serves the cities of Makati and Mandaluyong. South Star Drug, with the support of our trade partners, hosted a health fair for employees from June 28 to June 30 of this year at Robinson's Retail's head office. This is part of our year-round health and wellness initiatives that drive forward our holistic approach to workforce well-being. During the 3-day health fair, our employees availed of free consultation and screenings, a lecture series on health topics with healthcare professionals and pharmaceutical partners, was also held with experts from various medical fields. Robinson Supermarket, the marketplace on Shopwise, partnered with Woolworths for World Hunger Day. A portion of the profits from Woolworths products sold from May 20 to June 20 was donated to support Tribe Foundation's work in providing underprivileged Filipino children with daily school meals. A total of 66 school children will benefit from the school children who will receive daily school nutrition for a year. We are pleased to welcome our new independent director, Mr. Cesar Romero. He will be replacing Mr. Tony Go, who has been RRHI's independent director for 9 years. Cesar served as president and CEO of Shell Philippines from 2016 to 2021. Prior to that, he served in various capacities in the Shell group of companies, both local and international, for more than 3 decades. He was a member of the Shell Global Retail Leadership Team with set policies, strategy, annual business targets, capital allocation, and operations for Shell's downstream retail business, comprised of over 43,000 petrol stations, the largest single branded retailer in the world. He obtained his BS in Mechanical Engineering from the University of the Philippines and MBA from the University of Michigan. We continue to have 4 independent directors in our 9-seat board, with Cesar joining Mr. Enrico Cruz, Mr. Cirelo Noel, and Mr. Rodolfo Ang. Finally, here's our 2022 guidance. Net store additions of 100 to 150 stores this year. Organic capex of 4 to 6 billion. SSSG target of 5 to 10%. Gross margin guidance of 20 to 50 bips improvement. E-commerce target of 2 to 4% of total sales. We are now open for Q&As.
Thank you very much for your presentation, Ms. Gina, Christine, Stanley, and Suresh. And I would also like to say hi to Freya, who is watching us from Aklan, and Maki, who is watching from Marinduque. So we are reaching all over the Philippines now. So as we said, we will now open the floor for questions. But in the meantime, I have a question of my own, if it's okay, to start things off. I actually did some quick calculations, and it seems that the segments with the highest profit margins are the convenience stores, department stores, and DIY segments. Is that correct?
Yes, that's correct.
Okay,
EBITDA
so
margin.
incidentally, these are the segments that were most affected by the mobility restrictions. Now that mobility restrictions are almost fully lifted, how much growth are we expecting from these high margin segments?
Top line wise, we're expecting double digit. And
Oh,
same,
very impressive.
same with profitability, EBIT and EBITDA.
So are they on their way to going back to pre-pandemic contribution to the holding company?
Uh,
In terms of sales, we are not there yet. We are working on it because it was a telco sales, which is now telco sales move into commission, which is Gcash, which is people stop using a telco and mostly it's online transaction. So we lose that amount of transactions. But in terms of a CVS and the RTE, the ADS is the average sales.
Okay, thank you, Suresh. All right, so we will now start reading questions from the audience. There's a question here from Maki Benavides. Why did the Robinsons department stores at Ayala Mall's South Park and Ayala Mall's Cloverleaf close? Do you have other stores bound to be closed?
for those 2 stores, I think it's mostly because of very low foot traffic and yeah,
Cloverleaf did not close. It just downsized.
downsized. Yeah.
Okay. So Maki, it was downsized now. The Cloverleaf, is that right, Stanley?
Yes, Cloverleaf. Yeah, it was downsized to just one level.
Ah, I see, I see. But South Park is closed.
South Park is fully closed.
All right. Okay. And do you have other stores that are bound for to be closed due to low foot traffic?
Actually, we closed 1 department store this year in Gapan, but that's mainly the reason why is because we're transferring. There's a new Robinsons Mall that's opening in that location. So there will be a department store in that mall.
I see. Thank you for that. Okay. What's our next question? Uh, from Toby Tangsok, how much of the gross margin of the supermarket is from front margin versus back margin or suppliers?
Oh, it's still majority from front margin.
Majority is front margin. Okay. Thank you. Uh, from Nikki Garcia, can you shed some more color on how much average basket size was reduced due to inflation?
Supermarket.
Maybe I can
Yeah,
answer.
I suppose that's for the supermarket that was mentioned in the presentation.
It's down by about 10%.
Down
But
by
then it's up,
10%.
so basket size is down by about 10%, but then it's compensated by a significantly higher transaction count of almost about 20%.
I see. Thanks, Stanley. Okay, from Cyan Rap. Could the recent surge in COVID-19 cases hinder your second half results as compared to the first half?
As long as there's no imposition of lockdowns, I think, with the easing of restrictions, that I think increase in footfall results will continue in the second. If you recall, in August of last year, there was a lockdown, so you were coming from a low base.
Right. And I believe, yeah, that was August, correct. Okay, thank you. From Margo Villar, do you expect your same store sales growth to exceed 5% for the year after your terrific first half results?
Um, if I'm going to look at the second half same-store sales growth blended, last year it was still at negative level. So we're coming from a low base. Although fourth quarter where we were already positive because of the easing of restrictions towards the around November, December. But yeah, for almost like from July to November or October, we were on negative level in terms of same store. So the base is low.
Yes, I remember going to the malls last year, no November, December, for my Christmas shopping. Just to recall, what's your SSSG for the first half again? Is it 15%? Do I recall
At
correctly?
10.2%.
10.2. All right. So we expect to exceed 5% for the full year.
Yeah, I think so. It can be
Hmm.
sustained.
Okay, thank you for that.
There's no more lockdowns.
No more lockdowns. Yes, that's the best case scenario. Again from Cyan Rap. What are your plans for mini stop? Should we expect any changes or additions in store product selections?
We have a very interesting plan aligned with the rebranding project, which I think you all know already that we'll be move out from mini stop with a new brand, which will be announced it soon. More news or more things will be shared in the coming months on the plans. For second question, which is assortments. Yes, there will be a lot of new assortment will be in, and there will be additional expansion plan on RTE, ready to eat.
Okay, thank you, Suresh. And for the ready to eat, I was in mini stop last week, and I remember the last time we had an earnings call, Miss Gina mentioned that you're planning to introduce new products for the ready to eat segment, and she mentioned crispy pata, and it was there. It was in that mini stop that I went to, so I tried it. Super good. Love it.
Thank you very much. Please, everybody,
It's a guilty pleasure for me, but I should not be eating it that much.
you should be try
uh,
all products recently launched last 3 months, which is Luncheon Kawali, all which is doing well now. Actually, Crispy Pata is last year launch. It's almost 1 year anniversary.
oh, really? The first time I saw it was last week. But yeah, I'm very happy to have tried it finally.
Okay. Thank you.
Cyan Rap is saying that they're watching from North Cotabato. Thank you, AB Capital, and I guess thank you also to Robinson's Retail. Jaime Zalamea is asking, will you be aggressive in your expansion of your e-commerce business? Should we expect percent of total sales from your e-commerce business to grow further?
With the opening up of the economy, we've seen contribution from e-commerce sales declining as a percentage to total sales. However, we continue to expand, meaning adding more stores in our e-commerce sites and adding more banners. So we'll be adding mini stop soon in Go Kart. So we're not stopping with our expansion plans. It's just that we're coming from a high base because last year there was a lockdown, right? So people are buying online. But with the opening of the economy, people are going to the stores.
Right, right. That's actually the most common buzzword in earnings calls recently, that term omni-channel. So it looks like
Yes,
RRHI is also going in that direction, that, an omni-channel approach where you do a brick and mortar and e-commerce sales at the same time.
yes. We're
Hideki Yoshihara is watching from Tokyo, Japan. I love Robinson's department store, I guess, when he went to the Philippines. And I support your company. Thank you.
Thank
Oh,
you.
not just in the Philippines, we're in Japan also. From Toby Tangsok again, how much of the gross margin of the supermarket? This was asked already, I believe. Okay, from Hitoshi Iemura. Iemura-san, hello. It's been a while since we talked. Uh, Question from Iemura-san. What impact do you expect in the second half by high inflation?
Well, even with the high inflation environment and second quarter, we've seen sales increasing. Uh, yeah, it's also attributing to the increase in the top line. Maybe Sandy can add to that.
Yeah, we're continuously seeing some inflationary pressures coming from, of course, the price adjustments of our vendors. While we also understand that um, some of our shoppers are constrained. So I guess what we're trying to do in the supermarket right now is to add a lot of bundled offers that is intended to help stretch the wallets of our shoppers.
Okay, thank you. I guess there's also the factor of pent-up demand from the previous 2 years. So I guess that could, somehow help overcome the high inflation that we expect in the second half. So thank you, Stanley. From Joseph Samuel Tang, may you share with us more information on the operational efficiency you expect to harness from your venture with Dart. Are you going to add more dark stores than actual physical stores?
That is a JV actually.
They actually manage it. Hindi tayo.
Yeah. We're not the one managing the dark stores. We are just supplying them the products.
I see.
Rob- Yeah, your Robinson supermarket supplying them the products.
I see. But although, can you maybe explain further the concept of dark stores? Ako personally, am not that familiar with it. So maybe some of our audience could be enlightened as well.
I think they have a curated and in terms of product selection,
Mhm.
uh, and they will deliver the products within 50 minutes. Within 15 minutes.
I see, I see. Okay, thank you. Uh, Albert Uy, will you still be rebranding or renaming Ministop?
Yes, we are. We're planning to rebrand that starting September. Yeah, we will be announcing and putting out disclosure on the new name.
Okay. I saw on I think that's on the Ministop Facebook page. You had a contest a while back, asking people to suggest a new name for Ministop. I actually wanted to join, but I had no idea what to put. But it was very interesting. I hope the new name would come from someone from the public.
We receive almost like 84,000 participants.
Oh
84,000.
wow!
Yeah.
And there's finalized like around 60, and we narrow down then to top 20 before we choose what name we want to put it up next one.
I see. So the winner is, the name that the winner suggested. That's the name that you will use.
It's not necessary, but that's a suggestions part only.
Okay. It's very
Use it.
exciting.
You will know next month.
Okay. I wish I joined. Maybe I would have won. Okay, from Tan C, is RRHI looking at quick service restaurants as a business?
Well, we had maybe for quick service, it's through mini stop, through the ready to eat.
I see. Maybe you can expand your dining area for mini stop. Okay.
And we will be now announcing soon on our plans
Ah,
for.
secret. Sige. I won't push that question anymore. From one of our Japanese investors, I'm so sorry I cannot read your name, but what's the degree of impact differences coming from inflationary pressures do you expect between Q2 and Q3? I guess he's asking what's the inflation outlook of RRHI for the next quarters.
I think Q3 should be less.
We're expecting it to be lower than 2Q.
So if I recall correctly, we peaked at around 6.7% recently. So do you believe that we have peaked already and inflation will start to go down?
Well, if you notice commodity prices starting to peak as well.
Yeah.
Yeah.
Um, maybe I'll answer for the supermarket. If our basis is the price adjustments being sent by vendors, we saw the peak in Q2. We're still seeing some price adjustments coming in right now. I think by and large it has somehow stabilized.
Oh, okay. Thank you. As a frequent shopper, I'm very happy to hear that. Okay. Next question is from Toby Tangsok again. How is the performance and profitability distribution centers of supermarket given the inflation?
Oh, it's it's about break even right now. Um, because of two things. One, because of the fuel price adjustments, which we're somehow able to pass on to our vendors. But the largest difference is that our Pampanga distribution center is still very much underutilized. It's a 40,000 square meter distribution center, and we're only at 35% utilization.
Okay, so at least there's room to grow, at least for the Pampanga facility. All right, thank you. Done. Okay, just waiting for the next question to come in. Guys, if you have any more questions, please type it in the comments box. Either if you're watching on YouTube or on Facebook. We'll read out your questions for you. In the meantime, while we're waiting for more questions to come in, I have a question of my own for our speakers. What's your favorite mini stop ready to eat product? I need recommendations for my next trip to mini stop.
One of it still number one seller. Chicken is the best.
Yes,
And
I know. I'm a big fan of the chicken.
And most of the RT now we have revised the quality. We improvised most of the RT products, which is Kariman Ong, which is sales continuously increasing. And now we are looking at the steam bun, which is a slow moving product, which is we again revising the quality and the product price itself, which will be relaunched back on next month. once the production line is ready, and more new other items which exciting things coming up soon.
Okay. Personally, I'm a fan of the fried chicken and the fried shawmai and the crispy pata. Basically, anything fried is good for me. So hopefully you will have more healthy options so I can live a longer life.
We
I
have
think
one
we have a
more.
question here. Sorry.
We have one more line production in a premium and premium products and healthcare products lines coming up. It will be most probably end of year.
Okay, looking forward to that. All right, we have a question from Albert Uy. How's the uptake or adoption of the Go-Kart app so far?
More to come to you.
So far, so good, I think. But we're continually improving the site. So customers' comments, we value it. So we can
Okay.
further.
Can you at least maybe can we maybe uh, tell the audience more about the Go-Kart app? Like what is it for? How does it work?
So Go-Kart would be the Go Robinsons app. We rename it to Go-Kart, and then all the banners, 14 banners are already in there. So you can, wherever you are, you can indicate which store you want to shop, and then indicate the address, and they will direct you to the nearest store. So if you want to shop in supermarket, South Star, handyman, you just indicate there. You can see the products
Oh,
that you
that's
can.
cool. I think we're playing the Go-Kart video now. So basically, it's all the brands of RRHI under one app. So that's
Yes.
great. Ah, I see. I should download that. Sige, I will.
Actually, we have more promotions in Go-Kart than in store. So there's a lot of promotions in Go-Kart.
Can I use my Robinson's Rewards card there?
Yes, you
Like,
can
is there a
use,
tie-up?
yes,
Yeah.
and you can earn points.
Okay, great, great. Okay, so we have a question from Maria Victoria Tabora. By how much did rewards card membership grow year on year in first half of 2022? And how much percentage-wise of RRHI's revenue are from rewards card members? That would include me.
717.
It actually varies from business units to business units, so it depends. For supermarket, I think it's higher, right?
72.
70%. For Southstar, it's around 17%, 17. For the other business units, they're also more than 50%.
Okay.
So it varies in percentage. But what we notice is that the basket size for the Go Rewards members is like double those which are not members, the basket size. So they actually purchase more.
I see. To maximize the rewards, I'm guilty of that actually. I end up buying more than I should just because because I have to use the rewards card. Okay. So thank you for answering that question. Um, I believe I can see a question here from Toby Tang Sok again. Where is the supermarket's expansion focused on? Are you focused more on Luzon or Vismin?
Not necessarily. We expand whenever there's an opportunity for us to go to an underserved market.
I see. Okay, so there's no specific geographic focus, just wherever the opportunity is.
Right, right.
All right,
As long
got it.
as we'll open.
Yeah, as long as there's opportunity and where we can make money.
Okay. Okay, from Joseph again. In terms of operating hours, are all your stores back to pre-pandemic operating hours already?
Yes, most are back. All,
Most.
all,
All right.
all, all luxury.
All na. All right.
Yeah.
And the second part of his question, has supplier support returned during the second quarter?
I'll answer.
Yeah.
Yes, but it depends on the support. What we're seeing right now is a significantly less um,
Product launches.
product launches from the vendors. I think that because of the global supply chain disruption, the focus of the vendors right now is to maintain availability of their core products rather than introduce newer ones.
Okay, I see. Thank you. Uh, do we have any more questions? Okay, so I guess we our audience is out of questions, and we're almost out of time anyway. We're almost at 1 hour, at the 1 hour mark. So should we end this call already? Okay.
Yep. Yep.
So before we go, Miss Gina, maybe do you have any last words for your investors?
Thank you for joining the call. And if you have any questions, you can just email me at gina.dipaling@robinsonslegal.com.ph. Thank you very much. And then see you in the next quarter's call.
Well, next quarter. So looks like we're doing Q3. Are we doing the third earnings call with RRHI?
All
I'll
right.
take that as a commitment. All
Thank
right.
you.
So thank you very much again to our speakers from RRHI for joining us today. And thank you to the audience for the very lively participation in our earnings call. Before we end this call, I would like to remind everyone of the upcoming events for AB Capital. On Friday, August 12, we will be doing an earnings call with FINMA Inc. And next Wednesday, August 17, we will be doing another earnings call with Bloomberry Resorts Corporation. So I would also like to remind everyone of the awesome functionality on our AB Capital Advantage platform called Conditional Order. Maximize your income potential and minimize your investment risks even when you're away. Set your conditional orders via AB Capital Advantage, automatically buy on breakout and sell to stop loss. You'll never miss market opportunities again. Just set, forget, no regrets in the end. Again, thank you for joining us today, and we'll see you on our next call. Bye, everybody.